don't understand. Talk. But let's see the question. Are you ready? Those of us sitting down here, are we ready? Okay. Question 1A. It says a bill that is designed to reduce the nation's budget. Nation's budget deficit passes both houses of National Assembly. The Federal House of Assembly tells us that the bill will reduce the deficit by 500 billion naira over 10 years. They are proposing that the thing will reduce what? The budget by 500 billion. But we're going to find out whether they are telling the truth or they are not saying the truth. Maybe it's half truth. The page 54, 2019-2020. Have you seen it? Don't say. So, in national, when they pass budget like that, they talk as they like. I mean, the budget, this will reduce by this, and this economy will be very fine. In short, the one who will not even ask them to talk. But they say that this is their budget. It will reduce deficit. Deficit is when the payment is more than receipt. I mean, so the thing pay less. According to them, for 10 years, what it does not tell us is the timing of the redemptions. For say year one, you saw the redemption, 27 billion like that, till year 10. These values you are seeing are all future value. I hope you understand. They are future. When somebody says something will reduce, year one, year two. So that means those values are future values.
Excuse me, sir. What number are you treating, sir? Sorry, sir.
Page 54, 1A, 2019-2020. Have you seen it?
1A, okay.
You don't see it?
I've seen it, sir. Thank you.
Can I continue?
Yes,
good. Now,
yes, sir. Thank you, sir.
It is from year 1 to 10. So those values are future. We're going to bring them to present and find out whether it will actually reduce up to what? 500 billion naira. And we all know present value. I taught you, but in case you don't know, there's what we call present value, and that's what we call future what? Value. I call this D, deficit, have it? At time what? T, summation. Don't mind the grammar, but don't mind. But we just the right formula, we have to write formula. It starts from 1 to what? 10 years, have it? The 1. I don't think you have forgotten this. If you still remember MPV, have it? MPV, we'll write this one first, have it? Before we say minus CO. So what is there is all future value, have it? The 1 year. The questions I should find out whether these deficits, all these deficits you are seeing, whether it will reduce the budget to 500 billion. Are you following? And that 500 billion is what they are telling us now. Now. And that now means present. That's what they are telling us. And all these ones are futuristic. Year 1, year 2 is going on like that, year 10. So I'm going to bring all this future to what? Present. And see whether it will be equivalent to 500,000 or less. So that I'll be able to tell you that truly, what they said is true. That the budget was actually reduced by 400,000. Or we say no, it was reduced by less than 500,000. I will now work on the thing. Is that okay? They say the federal government can borrow at 12%. The 12% are discount what? Rates or cost of capital or opportunity cost. What is the true? Get it clear. What is the true deficit redemption? That means this 500,000 may not be the true redemption. We want to find the true redemption. All those deficits are future. We discount them to get what? Present value. Is that okay? Any question? Can I continue?
Yeah, man.
Good. Those of us online, I hope you got the formula. 27 billion. You know, when it comes to billion, zero is the reach 9, I think. Agreed. Oh, zero the reach 9. We can decide to ignore the zeros. Use it 27 times 2. Abi, when we finish, we put the 90 to get our final answer so that the figure zero no go play. See, we'll start without wasting much time. What's the first one? 21. Oh, I hope when I did here with me. Rest of our plus summation means we are adding, Abi. Summation means we are adding. Next, over into rest of our third one. Eh? Okay. 1.12 plus 40 what? Over 1.12 raised to power 4 plus plus say 87 all over 1.12 raised to power 6 plus 62 all over 1.12 raised to power plus 67 all over 1.12 raised to power plus 72 all over 1.12 raised to power. Finally, all over 1.12 raised to power 10. Who is not clear? Is there down, federal government. They told us, not be me, not me. And because is it clear? Those of us online, any question?
Mute your mic.
Is to know the present value. You know, they were all in future. And what they said to reduce to was 500 billion. And that was the future. So want to know whether it will match the 500 billion or it will be less. Is it clear? Yeah. Because the question has already told us. Because for the question they even say, what is the true, hello? For the question they say, what is the true deficit? It means say it may be true or may not be true. Just from the question. So I'm just saying no go do true. They already talk true for that place. Lies plenty. Oh yeah. So I hope the calculator is working now. Oh yeah. This. For so they can't ask for something. No. We're only looking for deficit. What you should understand in this question, in case of objective. Objective question can tell to find the present value. You all know that present value is future value over discount, abi? So those are the things you need to remember. Present value, future value that we have already learned anyway. Or when we still see question like that, we apply. So what's the result? You just press 27 over this plus like that. They don't get time. Una dey look but no na add am. Never sabi how to add it. 7R is what? 12. 12% is 4.12. Add it to 1. 9. Year 1, year 2, year 3, like that. Any other question? So only you go do the exam hall. I pray I will get the support you. Abi? That's the only thing we can do. What's the answer? Wow. No, forget converting. I go do the conversion myself. Oh, Shema can still calculate them. Oh. I think say we don't set to for the exam. Okay, let me run it. What do I do? 24? You go run everything. Now exam you do now. Exam you don't need to 27 divided by 1.12. That's what they do. Plus 32 divided by 1.12 raised to power 2, Abi. plus the next one is 37. I'm just doing it so that to confirm. Oh, I don't go for more. Oh, don't you worry, the calculator. Don't go for more. 27 divided by 1 point. Those of us online, anybody calculating anything for us? Make sure you are doing something. Oh, this is not error of allowing them to do it. Do it yourself. What you practice today will be reflected on Wednesday exam. Uh, 37. I hope when I do a press calculator by yourself. How they look at that as a do. Those of us online, I hope you are calculating. 27 divided by 1.12 raised to power 1, but the 1 is not important, plus 32 divided by 1.12 raised to power 2, plus 37 divided by 1.12 raised to power 3, plus 43 divided by 1.12 raised to power 4, plus 47 divided by 1.12 raised to power raised to power 5, plus 57, I believe, plus 57 divided by 1.12 raised to the power of 6, abi?
Antonia.
Plus 62. You must know how to press calculator today before you go. Make sure you know. You don't know, let us know. No shame, oh. No shame for this kind of exam. 67. Okay, 57, 62. Then 67. 67. 1.12 raised to power 8 plus 72 plus 72 divided by 1.12 raised to the power of 9 plus finally 79 divided by 1.12 all raised to power 10. 265. Good. You are doing well. So we're having equal to 265.33164.72. Multiply, we are talking about how many zeros that will remove billion, 9 zero, abi? We'll take and multiply this. This is 3. Oh yeah, now. No, forget, just help me. You don't see board now, abi? I don't give you my own. Say a billion is 9 zeros, abi? Multiply by 1 with 9 zeros. Just say times 1, 9 zeros. Multiply by this. What do you have? Those of us online, did you get the same thing? Abu, na no try. In a simple language, the total present value is 265. That's not what I said. 0.3 words. Oh, this one is okay, Abi. 3 billion, Abi. Unless they all know billion. In a simple language, the true deficit is approximately 265 billion. Abi, the true deficit reduction is 265, not 500 billion. Yes. No, it is a theory. You now say the true, according to the question, the true deficit reduction in the bill is this, not 500 billion. Is it clear? That's the answer to question
Sorry, the
one.
board is not too clear. You get 265.
The board is not too clear.
Yes.
265. This is fine. So you don't see is it clear now?
Yes. Yeah, 265.3 billion.
3 billion. Yes, yes. So that is a true deficit reduction, not 500 billion, as proposed by the National Assembly. Is it clear? That one don't go. We're moving on to 1B. I believe they are following. What you need to gain there is that to find present value. Apart from the calculation, when you're asked to find present value, the future value, which is the deficit, should be discounted to give you present value. And those are the things you need to, in case of objective question. Number 1B, Enforcer PLC is considering whether or not to invest in a new project which will involve the manufacture of detergents. The project will involve purchase of machinery and equipment costing 100 million, are expected to have life of 5 years with an estimated residual value of the right here. Make it just put them, sir. Let's just believe it's 4 million, Abi. Is it 3 million there? My own no clear with that. 1B. 3 million. Is it 3? Now I tell you now, that one saying 3 million. You see 3 million? What is this one? This one is residual. Residual value should be a value. So we are trying to put something there. Is that okay? Not with this one. Nothing concern this one. Okay, Neil. Oh, yeah, nah, right, and Neil. You know, day. Neil. And they say no day. NIL. See, so this place was H. They go right H. And you can see that N can be as if it's like this. So it's Neil. Neil, is it okay? Neil. No, it's correct. Correct. Because we have solved one before that we solved that was Neil. Oh yeah, now let's just work on that because that H now N, but they won't be like him. But residual value of Neil, simple. That means residual value is not available, 0. Happy? Continue. Other projects costs include motor vehicle.
Antonia.
With estimated residual value. Okay, this one get residual value. With estimated residual value of 120,000. Forklift costing 3 million with nil residual. As I'm solving it as theory,
Antonia, please mute your mic.
In this case, because I've read first paragraph, I want to bring out the project cost. The project what? Cost. Or cash outflow. I mean, or the original project cost. Whichever one. So let's quickly bring that one out, not to waste our time. Solution to this question has started. Project what? Cost. Project cost. The first name, machinery and what? They want to start this business. They need something. They have to spend money for them to, as a kind of asset, to start this particular business. So machinery and equipment, 100 million. This one, okay. Which one will come out? Will come out 20, 3 zeros, Abi? It's okay, so that we can have 120, 100 million. Will now be 10000. Is it okay? Good. Now, the next one is, it says 5 years. We got 5 years for all of them, no wahala. With motor vehicle, 25 million, Abi? Motor vehicle, 25 million, like that. What's in again? Forklift, 3 million. That one has estimated value or residual value. We'll look at that one later.
Gideon, please, can you help us to mute people? Can't see the board.
120,000. The other one, those two don't get. Forklift costing. Forklifts costing 3 million, Abi. Everything added together, what do you have? 20. Is that okay? Any question? We have just gotten project cost. That means that project cost is always our year zero, Abi. Year zero. If we want to calculate MPV, Abi. Hello? MPV, that should be our year zero. Year zero is always the cost, and that year zero is a cash outflow. Remember that cash flow has two values, positive and what? So this one that is cost is always negative. From the next situation, but let me just read something down. The marketing director of Ecosa PLC recommended a selling price per unit of detergent part will be 18 naira in the first 2 years of the project, after which it will increase by 100 naira per unit. Okay, the project sales volume has been estimated to be 2 million units in year one, increasing 9% per annum. The variable cost per unit of producing 5% of sales.
Samuel, please mute your mic.
62% thereafter. The annual fixed expenses. That annual fixed expenses is not fixed cost. I hope you understand. Fixed cost 2 million, excluding annual depreciation of 4 million. Excluding. That means in this fixed expenses, the load. Fixed expense of 2 million is a load. Annual depreciation is not inside. We have to calculate our annual depreciation. And we move on. Yes? Daniel. How much? 1 million. Oh, yeah, no. Yeah. But it's only, okay, 1 million a day. Please adjust it. I thank God we never solve and we never reach that side. So 1 million, because me I want 1,001 and one right, but because I don't see M as the end. So 1 million, yeah, I'll write 1 million. Everybody write 1 million. That one has gone. We'll get there.
It's a 1 million actually.
That place we said him. That place on him is 1 million. Him. Residual value of him. It is residual value of 1 million. Good. Annual depreciation of 4 million has been estimated to be incurred in year. Okay, in year one, I believe, increasing by 8% thereafter. That should be year one. The company cost of capital is annual depreciation is 4 million, has been estimated. That means that these people have calculated depreciation for us. No. The annual depreciation is 2 million. Are they excluding annual depreciation of 4 million? In year one? Yes, that's what should be. 8% thereafter. That one is clear. So there is annual depreciation of 4 million. But it's just that for year one is 4 million. The other year to be what? Increase. And we move further. The question A, what is the payback period and accounting rate of return, assuming a straight line method? So in a simple language, because the person has mentioned straight line method, we need to calculate another depreciation. There's one they have given us, but there's another one that is there, which we must calculate. So we want to look at depreciation so that we can add that one later. But that one has made us to understand year one is 4 million to be increasing. But there is another depreciation, which is as a result of machinery, as a result of motor vehicle, as a result of forklift lift, using our formula. Because the person has said straight line, but this annual depreciation was what we were given. Are you following? It was given, and they said to be increasing every year. So our depreciation formula, which I believe you still remember, over N, Abi, cost of the assets minus estimated what value or residual value or disposal value, any grammar you want call out, all over what N. First one, machinery, Abi, M-I-E. Machinery is 100. Estimated is 1 million, Abi. So that means we are going to write like this. Watch, so don't make mistake. Oh. Remember, we have reduced it here. We have removed 3 0. So don't go and write 1 million to the end when this one is already 100,000. All over 5 years, Abi. Somebody, this should be 99, Abi. Divide by 5. What did they get? Somebody now, I'm going to press this thing. This is 99. Divide by 5. 19,800. That one don't go. Another one here is motor vehicle. Motor vehicle is 25.
Sir, I don't understand how you get this though.
Which one?
The depreciation you are doing.
This is formula for depreciation. I agree. On a straight line. The question says straight line method. So formula defined. First asset, every asset was depreciated, Abi. After usage, the thing must come down. That one is sure. Not mind that we are not seeing depreciation with our eyes. Because depreciation is a non-expense, a non-cash expense. Abi? Nobody pays depreciation from his pocket and say, I have paid for depreciation. So that's why it is called non-cash expense. And in finance, we regard this as an income. Are you following? In accounting, in real life, it's an income. But in the final account, it's recorded as expenditure. I hope you understand. It's a way of helping the company for tax